Hi, my name is Daniel Kim. I'm here to present to you the accounting assessment from Chapter 1 to 6.1. Today I'll be presenting you all the aspects of accounting I learned so far in the course. From assets and liabilities to income statements to financial statements, these components will be covered in this presentation. In order to understand these segments, I'll be explaining these factors with thorough explanations in a clear and concise manner. I hope you enjoy my presentation. First of all, I will give a brief introduction to accounting. The first thing you may ask is, what is it? Well, accounting can be considered as a procedure to keep records and record finance through charts and other various methods. It involves the process of gathering financial information through different techniques, preparing and collecting permanent records, rearranging and summarizing transactions, and etc. And many may ask, what is the point of studying accounting? The main purpose of studying this subject can be concluded through different reasons. Many of us may consider being businessmen or women when we grow up. So therefore, in order to organize our company, we will have to use these accounting methods. We may not know it, but we account on every purchase or loan we make. For example, we may lend our friend $10 and we keep in mind that he owes us money. This procedure involves accounts receivable, which is used a lot in the accounting world. In the second slide, we are presented with a ledger chart that explains the concept of the debit and credit principles. First of all, a ledger chart is basically a specially formatted record that is shaped in a T. This T shape is essential towards general ledger account as it distinguishes the difference of debit and credit. Debit and credit plays an important role in the course of accounting, as it is mainly based on the principles of it. It is used throughout every charting method, such as balance sheets, income statements, trial balance, and etc. In this case, debit does not always refer to an increase, and credit does not always refer to a decrease, and it is the same in the other way. In the assets section of this slide, debit is an increase and credit is an increase, so increasing debit is a better way to go. The liabilities section is a complete opposite. When debiting something in the bill, it means you owe more. This goes into the same effect as equities. In conclusion, the increases in asset accounts are recorded on the left side of the T. Therefore, when we increase an asset, we debit it, and when it is decreased, we credit it. The increases in liability accounts are recorded on the right side of the T. Therefore, when we increase a liability, it is credited, and when it is decreased, we debit it. In the following slide, we are introduced to an income statement and a balance sheet. Both accounting charts are created by ABC Accounting Services and are related towards one another. A balance sheet is basically an indicator of the financial position of a business in any given point of time. It involves assets, liabilities, owner's equity. An income statement shows the revenue and expenses accumulated over time. It involves revenues, expenses, and net income. Income statements are mainly produced at the end of a fiscal period. Income statements are used to determine the net income or loss in order to find out the health or position of their business. This is when earnings are measured. Also, an income statement does not necessarily need to follow a calendar year. For example, if the transactions first start at June 11, 2011, it may end September 21, 2012. In an income statement, accounts are written in alphabetical order. Revenue comes before expenses, and the net income in the end must be double underlined to clearly indicate the final value. Revenues are related to the sale of a good or service. Moving on to the balance sheet. A balance sheet is a snapshot of the financial position or the health of a business at any given point in time, as mentioned earlier. The balance sheet is ever-changing. The balance sheet has a similar heading as an income statement. First, the name of the business and the form of financial statement are stated. The date when the balance sheet is created is also stated. For balance sheets, we usually write to the statement which reflects the position of the business at the specific given point of time. There are three major parts to a balance sheet: assets, liabilities, and also owner's equity. Under assets is anything tangible or intangible that is capable of being owned or controlled to produce value and is held to have positive economic value. In other words, asset is what the company actually owns. Liabilities are amounts owed by this business to other companies at any given point of time. Some examples are loans, mortgages, and also accounts payable. Liabilities are placed in order of how soon the amount owed can be paid off. In that case, accounts payable are usually on the top because they are short-term loans. Owner's equity shows the amount of funds contributed by the owners. It includes net income and common stock. Both parts of the accounting cycle are very similar towards one another as they show the information but in a different manner. Generally speaking, revenue can be seen as assets and sometimes liabilities as expenses. As typical examples of the income statement and balance sheet, they both include their company's name, what type of chart it is, and most importantly, the date. In this particular chart, it can be deduced that both charts are based on the same information, with net income being included in the balance sheet. On the fifth slide, I'll present you the aspects of liabilities and expenses, including the similarities and differences. First off, liabilities are listed on the balance sheet while expenses are listed on income statements. Liabilities can be known as debts, such as accounts payable, while expenses are basically the cost of operating a business such as utilities, rent, etc. Both of these factors are some things that you would not like to have an abundance of if you were to conduct a business. On the next slide, we are presented with a GAAP. A GAAP is a generally accepted accounting principle that consists of different sets of rules, procedures, conventions that set the accepted accounting practices. There are some GAAPs that are formal regulations and some that are common practice. There are a broad range of GAAPs in the accounting world, from business entity concept to continuing concern concept, and etc. In this case, principle of conservatism provides that accounting for a business should be fair and reasonable. It is general concept of expenses and liabilities as soon as possible to determine the outcome and to only recognize revenue and assets when it is sure they are going to be received. Therefore, there should be no frauds involved and should always be presented with the truth. This particular GAAP also states that accountants should evaluate and estimate in a fair manner, with assets or profits neither overstated nor understated when uncertainty exists. For these following transactions, I've created a chart to show the debit and credit for each particular transaction. This can also be called a journal, as it shows the date of when the transaction was completed and the debit and the credit. On March 5th, Mr. Lee styled Jalen's hair on account for $200, so therefore we should debit account receivables and credit revenue. We can summarize this as a performed service on account. On March 7th, Mr. Lee fixed a bad haircut for A.Ings for $300 cash, but did not deposit it in the company's bank account. In this case, we should debit drawings as we did not deposit it in the bank account yet, and credit accounts receivable for A.Ing. This can also be summarized as a performed service on account. And on March 10th, Mr. Lee purchased $1,000 hair products from Joseph's Hair Products for $500 cash and the remaining on account. For this transaction, the hair products will be debited as it is an asset, and cash will be credited along with the accounts payable for Joseph's Hair Products. And on March 24th, Mr. Lee collected $400 cash for payment on account from Michelle Pang, so therefore cash should be debited while accounts receivable will be credited. It can be summarized as payment on account. For the next slide, the first transaction can be described as you paying your fellow employees $1,000, which is also known as wages. Therefore, in order to do this, you have to take $1,000 out of the bank. For the next account, it can be described as you taking a loan out of the bank, which results in crediting the bank loan. The third account can be described as you buying an automobile for $3,000, which means you will have to credit your bank. The last account can be described as you performing a service for A.Lee for $500, but she pays $300 first and the rest are on account. In this slide, there are multiple things wrong with this journal. First of all, the indent for the credit is not done for the second transaction, while the first transaction is done for the debit and not the credit. For the first transaction, the automobile should be switched around along with the debit and credit as you're not put in the proper places. For the second transaction, the bank should be credited and drawings debited. For the next slide, we can solve Mr. Lee's problem through a very simple method. Since Mr. Lee took out $5,000 instead of $500, we can subtract these two, which equals to $4,500. Therefore, in order to fix this transaction, we can deposit $4,500 back into the bank, which $500 cash are left. In conclusion, we credit Mr. Lee's drawings by $4,500 and debit the bank by $4,500. The following slide is a trial balance sheet from December 31st, 2005. A trial balance is a list or chart of each account with debit and credit at any given point of time. They are mainly created when the accounting period is over to check the balances of the debit and credit. The previous step from creating a trial balance is a ledger account, as it helps organize and summarize the information in an easier way. The debit is always on the left side and credit always on the right, same as the ledger account. The trial balance's main purpose is to help prepare for the actual financial statement and help identify any errors or problems that may be present within the accounts. Based on the type of accounts we were given, it was clear that I had to organize them into an income statement as it showed revenues and expenses. As you can see, I've double underlined the total revenue and expenses and showed the net income, which can be found by subtracting revenues from expenses. Therefore, Mr. Lee made $9,949 of profit in the month of May. For the last slide, the better company to own will be Gavin's Cantonese School. This will be due to Gavin's low expense and debts owed. Compared to Jody's salon, Gavin has a lower range of liabilities with $95,400 and Jody at $255,100. With Jody's hair salon, there are a lot of expenses and the assets are particularly guaranteed as some of the supplies may be damaged or some people may not pay back through the accounts receivable. Thank you very much for listening to my presentation on account from Chapter 1 to 6.1.